What's up traders, daily investments over here, and for today we're gonna do something a bit different. Today we're gonna have a strategy not on the 5 minutes or the 15 minutes. So this is gonna be a strategy on the daily chart. So this strategy is one of the easiest strategies to implement, and because it's on a daily chart, you don't really need to look at it constantly and look at the position. The strategy we will use is fit for swing traders because we will use the daily chart. An important notice is if you don't like the long time frames or if you're not comfortable with holding your position, this strategy isn't really suited for you. Okay guys, let's start this strategy video, and as always I would like to open TradingView. I've already opened it. For this video I'm going to use the daily Bitcoin chart. It's going to be the BTC/USDT pair, perpetual contracts on BYBIT. Just one thing before we start the video, as I stated before, I'm going to use the Bitcoin USDT pair on the BYBIT exchange. I'm going to use the BYBIT exchange because of their great fee model and the interface that they implement. It's really easy to work with, and I prefer to use BYBIT for almost all my future trades because of the fees. If you compare it to Binance, the fees on Binance are just way higher, and because of that you will lose more money. So that's why I always recommend to use BYBIT. So guys, if you don't have a registered BYBIT account, I would highly recommend to make one. And also, we would highly appreciate it when you make one to use our referral codes. It helps the channel and it will support us a lot. It will keep us motivated to make more content and create more videos. And the added bonus for you guys, because of that link, you can get up to $600 in bonus. Thanks guys. Now let's get back to the video. But for now, let's dive into the strategy we're going to use on the daily chart. So first off, of course, let's check if we got every setting right. So first off, you're going to go to the left side here on the symbol search and put in BTC USDT. We're going to use the Bitcoin USD perpetual contracts, and I always check on the crypto here which exchange it is. The next thing we're going to do is we're going to add the indicator that we're going to use for this strategy. So for this strategy, we're going to use just one indicator. And in all our other videos, we always are going to use multiple indicators. But for this video, we're going to break the rule and we're just going to use one indicator. So the indicator that we're going to use is the Ichimoku cloud. Ichimoku cloud is this one from the technicals, and we're going to adjust the settings a bit. So what we're going to do is we're going to go to the settings, and what we're going to remove from the Ichimoku cloud is almost everything. Go to style and you remove the conversion line, baseline, lagging span. So if it's correct, you're going to have only two things as the leading span A and the leading span B. What we're also going to input and replace is the displacement is right on 26, and we're going to use it on the 1. So now you're ready for the trading. So the difference that I've made right now in the chart is we went to the Bitcoin USDT, I've changed it on the daily, and the Ichimoku settings were changed. We're only using lead 1 and lead 2, and displacement value is going to be 1. Alright guys, so now let's start with the strategy. One thing that is important with this strategy is we're only going to take long positions. So we're not going to take any short positions in this video. This is important to know. We're only going to use the Ichimoku cloud to see if there's a bullish trend. So no bearish trends and no short positions in this video, guys. Sorry. So now we're going to see when is the bullish trend forming. So this is important, and one of the key elements to this indicator. If the green line is above the red line, for illustrated here, this means that there is a bullish trend. And there's going to be a bearish trend when the green line is under the red line, indicated right here, guys. So it is important to just look at this key element for the strategy. This is just one of the things that we're going to be implementing, so don't worry, it isn't the only thing. So when the price is, for example, below the clouds, so below the clouds, this means that we're in a negative trend, and vice versa, we're in a bullish trend when the price is also above the clouds. But one thing that's important, when the price is in the clouds, for example here, here, and here, this means that we are in a ranging market. So this is also a no trade zone, because always remember guys, the trend is your friend. So what's important guys is, the rule is we only trade long positions of course, and the other thing is the price must be above the cloud. So no trades in the ranging market and no trades in the downtrend. So when the price is below the clouds. So guys, now we're gonna look at a couple of examples. So what's important, you only take a long position in the strategy, and I'm gonna show it through this example when to take that long position. There are two key components before you're gonna take a long position, as I previously explained. So what we're seeing right now, and this is important, is that the price is going above the cloud. This is just one thing in this strategy that is going to be important, and the other thing is that the green line is above the red line, so you're going to see a green Ichimoku cloud. So on this candle right here, you always wait for the closing candle guys, of course, but on this candle you can take a long position. So guys, now you can take a long position at the close of this candle. So we're gonna take a long position right here guys, up. And for the exit strategy, we're gonna do something different. I'm not gonna use the risk reward of 1 or 1.5, and I'm also not gonna use the percentage levels. What we're gonna do for the exit strategy is something different, because with the Ichimoku cloud, we don't want to miss out on the huge price increases. So what's important with the strategy is you want to ride the waves for that huge price increase, and you want to cut your losses or your position right before the dramatically price decreases. So what's very important with this strategy is we're gonna keep our position as long as the price is above the cloud. So the price candles are above the cloud. So we're gonna use this strategy, and we're gonna wait until the price is going inside the cloud or below the cloud. This is important. So now you can adjust your stop loss towards that position and just wait. So what we're seeing right now is we're not gonna take profit level. We're just gonna wait until the price is in the cloud. So this is gonna be your stop loss. So what we're seeing is we're already making some nice gains. And what you're seeing right here is that the price is inside the cloud. So this is when you take your profit level. So the profit is gonna be around 7.5%. So when you add this with some future positions like a 10 leverage, you're gonna have some nice gains. So this is gonna be your stop loss. It is important to implement this exit strategy, because then you can make some huge gains. You're gonna cut your position when there could be some dramatically price decreases. So in my opinion, you're almost always safe. So guys, this is just one example of this strategy and this exit strategy. I'm gonna give another example. Here is another example on how you can take this strategy and implement it. So you're gonna wait. So on this candle, you can take a long position because the price is above the Ichimoku clouds, and we're gonna be turning a bit green here. So this is when you take a long position. So now let's take this long position, for example. I'm gonna zoom in a bit. Yes, it's gonna be here. So now let's take a look how it plays out. So look, for example, just look at these prices and these price increases. So just look at these price increases. And of course, this is a back test, so we're gonna be way back for the Bitcoin example. But just look at the price increases. And of course, this is also a daily chart. So in this strategy, it's going to be some very long positions sometimes, but it is nice to have this kind of strategies implemented besides your scalping strategies. So what you're seeing right here is that we saw a wick below the Ichimoku cloud, but this doesn't mean you're going to close your position. You always wait on the close of the candle. So it's still above the Ichimoku cloud here. And you can see you can make massive gains. But one thing that is really important is you can also wait until the cloud closes, but at a certain point, sometimes you're gonna just take those profits and don't wait until the candle is inside the Ichimoku cloud. So guys, this is a different strategy than you're used to, but sometimes a different strategy, for example, on a daily can also make massive gains. This was the video for this week. I'd highly appreciate it if you guys would subscribe to the YouTube channel. And we're gonna see you in the next video. Cheers guys, happy trading.